Hello traders. In today's video, we're gonna talk about how you can literally analyze the chart without having any problems. How you can analyze it and level to expect to enter your positions. A lot of traders out there literally analyze the chart wrongly, and if you analyze your chart wrongly, then you are going to be taking wrong trades, right? If you have a perfect or a good analysis on your chart, then you'll be having a good position, a good level to take your positions in the chart, right? So if you are new to this channel, I'm a camera forex, and I'm representing this to help you know how to analyze your chart correctly and to take your chart. First of all, I'll talk about the things you need to look for before analysis or before looking forward to take your positions. So watch this video to the end so your level or your way of analysis will change drastically, positively change drastically. So in analysis, there are some certain things that we need to look for that every trader needs to make it in mind and make sure that they find this correctly. And this each and every one of these points, I've already explained that in my previous video. So you can go and watch it one after the other to understand how you can literally apply it. So, but I'll box everything together in this particular video so you can find a lot of value in this video. Don't forget to give me a thumbs up if you are enjoying this video. And don't forget to give me to hit on the subscribe button if you are not a subscriber, right? And put your comment after this video, what you think or what you want me to do for you. So first of all, you look on your market structure. That's your the bias of that particular asset. Even in whether you are buying gold, GPUSD, or Euro USD, or any asset. So first of all, you look for the market or the market structure. Structure first slash bias or bias or the market bias. So after you identify either being the market being bullish or bearish or consolidation, you look for a level of what a levels of liquidity or inducement. So inducement levels or liquidity levels. So inducement levels or liquidity levels, these are this is the next thing that you need to look for after finding your structure. And after getting your inducement levels, you also need to look for where price is coming. Where price is coming. If price is taking the liquidity or an inducement beneath, where should it stop to reverse? And if price take a liquidity above or inducement above, where is it going to stop? That is your point of interest. So you find your levels of what of point of interest. So point of interest levels. Point of interest to take trace your position. So after finding your point of interest level, you also find where price is going to. After finding where price is coming to, you now find where price is going to, where price is going. So that is going to be your exit levels. So exit, your exit what levels. And these exit levels can either be your Excel or your take profit. So your Excel is where if price gets to your point of interest, where will price get to if you are wrong? And where your price will get to, where you want the price to get to if you are right. And be your take profit levels. So after finding your structure, structure is broad. That is fine. Other price is what price is moving to an upside or a downside or a consolidation. You look for in that same structure that you look for market structure shift and market structure broken, break of structures. In the next one, inducements where liquidities are citing where price will get to what to take people out of the market, right? And your point of interest and also an exit level. These are just the main four things that you need to know perfectly before you analyze your trade, or you need to apply this in your analysis. So let's apply this in one after the other in this particular chart analysis. This is literally gold. So let me go let me go the previous data so we can literally see where we are heading to, right? So let's use here, for example. So for our examples, before we can literally know where price is going, that is looking at the market structure. A market structure is a structure that give us that is a bullish market structure. It give us a levels of what of high highs and high lows. So if you see price moving to an upside, that's what we call a bullish market structure, creating a series of what a series of high highs and a high low, and vice versa when price is moving to the downside, and that's going to be price creating a series of what of lower highs and lower lows, breaking structures to the downside. So if we join these two structures together, like let me take this structure and join it to this one. So if I join these two structures together, you can literally see that you can literally see where a market structure shift will be coming. That is price failing to form a new higher high and a higher low. That's when we are seeing a market structure to come. That is at this particular level, price failed to create a new lower high. It shifted to break this structure, giving us a market structure shift. And at the top, price fails to break this particular high. So it fails to create a new higher high. So in this case, this level here is what we name as our market structure shift. You can call it a market structure shift or a change of what? A change of characteristics or change of character, right? So this is a market structure shift. But for market to keep on moving, you can literally see price what giving us this break of structures to an upside. So you can see price keep breaking structure to an upside. That is confirming the market structure being bullish, right? So if immediately we see this shift in market structure, we will be now be expecting price to be breaking structure to the downside, giving us a what? A break of structures to the downside. And that literally confirms a market structure being what? Being bearish. So these are the things that you need to look for, and all this is your market structure, right? All this is your market structure. So we identifying either market structure is continuing or it is reversing. So a reversals is going to be your market structure shifting or giving you a change of character. And the continuation of the market structure is going to be when price keep on breaking structure to a certain direction, either being a bullish or a bearish side. That could literally confirm your market structure continuation, and the change of character will will confirm your market structure reversing, right? So take this note. I know you should get closer to your book. You should get your book and a pen and paper, or your book, and then to write down these things, because these are some of the things that we literally ignore as a traders, and that doesn't help us. So looking at this, and looking at these particular levels, you can literally see here when price, we are taking from this low, right? So price break this structure to an upside, confirming a bullish market structure, right? So confirming a bullish market structure. We also have this particular structure here, this high two here, being broken to an upside. So in this case, we are getting a what? We are getting a signs of price wanting to reverse, because you can literally see when price get this, price fail to close above this level, giving us a weakened market structure, right? And we can literally see here when price comes here and later give us this market structure break to an upside, right? After price giving us this market structure break, we are expecting to see price to what? Price to give us a retracement and move more higher to break this level as a structure break to continue bullish. But in this case, when price comes lower, it fails to what? To go back again. You can see this was the lowest point we have, and price literally comes to take off this low. So immediately price take off this low, we have our market structure shift in there, or changing character. So market structure shifts here. So a market structure shift at this level will now be, for us to confirm the bearish movement, we need to see price breaking structure to the downside. As simple as that. So we can see the first move, which is this level, when price break this structure, when price break this structure to the downside, right? When we have a structure break to the downside, we get a retracement. That was the first retracement, and then we have another structure break here, right? So this structure break confirms the bearish movement, or confirms this market structure shift. So in trading, if you are taking your trades, we use two things, right, to take our trades. That is two type of entrance. That's a reversal entrance and also a continuation entrance. So if you are going to take a trade, if you are a conservative trader, you wouldn't like to be taking a reversal trace. You only take a continuation trace. But if you're an aggressive trader, which literally understand your chart, you can take your trace both reversals and continuation. But more conservative traders will literally want to wait to see the final shifts or the final response to a particular movement before they can enter the trade. So in this case, you can see this was our first break of structure after the market structure shift. So when you have this structure break, that means that we'll be looking for short positions. And if you're looking for short positions, note I said for market structure, you move toward to liquidity or inducement. So when price break this structure, this was our latest inducement or liquidity resting this level. This was a liquidity, this particular high, anything above this high was a liquidity, right? So, and that is the level of inducement as well. So, before we will be looking forward to take this trade, we want to see price to literally come back. Because we are selling, price needs to come back to take the liquidity before we continue the short. And in this case, this level, this particular move is what is a single leg move. After price break this structure and this was the lowest point price get to. They were having this as as a retracement, and will be looking for price to get down. And this level, price need to take off this level with a full body close before we can confirm this as a market structure break, right? As a break of structure. So when price get this, so now, as I said, first you need to see price taking our liquidity. So when price take the liquidity, that is first, and you are going to enter your position. This in this type of entering, we call it a sweep entering model, right? Sweep entering model. Price swept this what? This inducement, take the liquidity and giving us a level to enter. So if you are going to enter this trade, where will be your exit if you are wrong, or where will be your exit if you are right? That is one thing you need to know. A level that should be your exit if you are wrong is your next structure. You can consider this particular high here, this particular high here. That is, if price take off this particular high, then you should be out of the market. And where should you be targeting? You should be targeting this draw on liquidity, this liquidity that is also resting here, this low. So if price get to this level, you should be out of the one of the market, right? So if you take your short position at this level, taking your short position at this level, and then your stop loss above, your take profit should be here. So this is what you need to be repeating on daily basis. So after this, then if price take off this or this particular high low here, that means that we have a market structure shift. Note, price needs to what? To confirm a market structure break or break of structure, a candle needs to close below that low. For example, like this, you can see this red candle has closed below this level. So that confirms a market structure break. So you have a break of structure at this level. So if price break this structure, we look for a liquidity, right? And in this case, we can literally see that we have a liquidity here. You can watch this. I've explained this type of, or this type of inducement here. You have this inducement which is liquidity sighting above there. So this is an inducement, and this is a candlestick inducement, right? So if price take this candlestick inducement, we'll be looking for short, because that is our liquidity level. So price needs to take this liquidity before we can take a trade. If price is giving you a retracement, always wait to see price taking a liquidity, because price needs for to move, right? So after price taking this level is your lowest point. This level is your lowest point, and that is where you should be taking your profit if you are right. And you have to take your position immediately. Price is what price is giving you this particular rejections sweep. That's also sweep entering models. So you take your trade, you take your position at this level, right? Your liquidity just above this candle here, and then you target here, right? Just target the draw on liquidity, right? So if you target the draw on liquidity, you have a liquidity taken, and then you have a take profit here. So price keep breaking structure. Price needs to break structure to confirm that price is still moving bearish. So price continue moving bearish if you continue seeing a market structure break to the downside, right? So in this case too as well, this level, we are still in that bearish movement, because when price give this structure here to the downside, all this is a retracement. All these are retracement. And where is your liquidity? Your liquidity level is this high. Price have to take this liquidity before you enter the trade. But in this case, price didn't get to the liquidity. It's just tap into the order flow, which is this particular order flow that we are seeing here. Just tap into the order flow and then move, or tap into another block here, this particular order block inside the order flow,